Financial transformation in an uncertain world. CFO insights and strategies for success. And for the same, I would like to introduce the moderator. Saptarshi is experienced account manager with a demonstrated history of working in transformation technology and services industry. Skilled in client relationship management, customer engagement and relationship building. Strong sales professional with a focus on compliance and analytics software for a mid-large size businesses. Please welcome our moderator for the session, Ms. Hemalatha Saptarshi. Let's have a huge round of applause, everybody. And I would also request the following panelists to join us on the stage. Mr. Arun Kabra, CFO and President Enterprises, from TimesPro, Mr. Raj Kumar Jha, CFO at thyssenkrupp, Mr. Shinu Mathai, CFO at Tata Teleservices, Maharashtra Limited. Let's have a huge round of applause for every panelist. Mr. Laxman Prasad, CFO at Celebi Airport Services, India Private Limited. Ms. Khyati Maheshwari, CFO at Moet, Hennessy. And Mr. Nishant Vyas, General Manager, India Wolters, Kluwer. Let's have a huge round of applause for everyone. And I would request the moderator to kindly begin with the panel discussion.
Yeah, good morning, everyone. I hope all of you are settled after yesterday's turbulence. Yeah, so steering the economic uncertainties and implementing risk management strategies is the primary objective of a chief financial officer. The decision that is made based on the company's short and long-term objectives, and also keeping in mind the current and future financial realities. Actually, the CFO has to be prepared with so many answers that they have to give in the boardroom. Like, for example, is this the right time to make the expansion plan? What is the best source of funds? Is it equity? Is it bank borrowing? Is it internal financing? How do we manage the risk in the times of recession? So on and so forth, and the list is never ending. It's a big list. Traditionally, if you see, the risk management has been quite the defensive, like the value preservation. But of late, I hope all of the CFOs who are present over here will agree with me that the threat landscape has become very complex. The CFO, while making a decision, has to consider the internal as well as the external factors. The health and climate changes, the geopolitical changes that's happening, the recession, inflation, unemployment, cyber security, vulnerabilities, etc., etc. Okay. So what basically the CFO also has to do is a what-if analysis. And also, while taking a risk, the degree of risk has to be measured. Like, is this risk sufficient for for giving a value to the customers and my investors? Is this risk sufficient to actually create or reach the revenue targets of the company, or is it not worth taking that much of a risk? So a lot of things which the CFO has to now, previously the traditional way CFOs used to work, and the current CFOs has got a different hat. They have to wear many hats and take multiple decisions. In fact, becoming a strategic partner to the CEOs in taking decisions for many things that has to be, many decisions for the organization's perspective. So the first question is I would welcome my panel members who are all experienced CFOs, having rich experience in this industry. They'll be sharing with you all their insights and a lot of experiences that they have been having so far. The first question is to Khyati. So how can CFOs effectively balance the pursuit of growth with risk management in today's volatile business environment? Khyati.
Hello, everyone. We've been hearing since morning, and I complete echo that the CFO's office today is no longer the office where all ledgers are being tallied or just the accounting is being performed, right? So over the years, every CFO's office, including the finance teams, have evolved themselves, and especially to the changing business environments. Now, interestingly, CFO plays a very important role these days, not only in giving financial acumen, but also influencing a lot of strategies and decision making purely behind, I think, two things. One is risk management, and the other one I will touch upon will be data analytics. On the risk management, I think CFOs played a very pivotal role in preempting what could be the possible threats, what could be the possible opportunities, give their insights, evaluate financial data, and then influence the decision making, or be, like someone said, right, a co-pilot to your commercial functions. Secondly, on data analytics, with this new age and advanced analytics, CFOs are the one who could integrate financial data with market data and operational data and generate insights which again can help the larger organization to take an informed and balanced decision. And here I would like to pause and give you a very real life example. In my previous organization, where post-pandemic, the behaviors of consumer changed completely, right? The ways in which we were doing business for years and decades, and in that ways also we were evolving, were no longer running. Maybe offline, on e-commerce, because suddenly the consumer patterns change, market change, behaviors change, suddenly your game for your competitors change, all of that. And we were really at a flux that what do we do, what is not enough for us, right? There we took a step back and we said that we need to now foster a very hardcore data-driven decision-making process in the system. While we have so much data, we needed someone or some tool to kind of segregate that for us, because not all data is important to us, and we don't want our team to spend a lot of time in just integrating data. We want them to spend time on making some useful insights out of that data, right? And that is when, even in hard times, we took a decision to go ahead and implement certain technologies which would help to segregate, integrate, cross-functional, because there were different systems, there was no integration. Every system gave a very different kind of understanding. So this data would slice us and give us some kind of dashboards, which then helped us to put brains into making some valuable insights, preempting risk, helping cross-function that what could go wrong, what are our competitors doing, because again, those were integrated with a lot of market tools and operational surveys. So I think that helped us a lot, and then eventually you could catch the pulse of, okay, where the business is growing, right? So there I think it was very important, because CFOs can make insight out of that data. So net, I think CFOs need to, if I could say, interweave financial acumen with strategic insights, risk management, and data analytics to help and guide the organization towards the right decision making for a future sustainable growth.
Yeah, that was very insightful, Khyati. So, of late, if you see, the experts are actually predicting that the CFOs are more going into this machine learning and artificial intelligence. They need tools which can speed up and give accurate results for financial forecasting and risk assessment, basically. So the next question is to Laxman. So what role does technology play in financial transformation, and how can CFOs harness to drive strategic decision making?
Thanks, Hemalatha. Good morning, everyone. See, in today's world, technology is the center stage of everything what we do. So what I'm trying to give my perspective is that while we're moving to a technological journey, technological transformations, there are certain nuances we need to be mindful about it. The first thing is that whatever you design, keep it in mind where the processes or businesses are able to move to a technology in a seamless manner. Always keep that in your back of mind. That's the point one. If you want, the second thing is, if you talk about a decade or 2 decades back, the key processes were kind of moved to a IT technology kind of ERP and all. But today, almost every processes are moved to a technology or digitalizations or automations. So think about it, whether you're going to have a small approval or small documentation process, everything people want to move to a digital process. That's how era we are living in. And third, important point what coming up is, when you do a digitalization process, it's very important to look at the standardization of your processes. I'll just give one real-time example. Recently we are trying to introduce RPA and bots-based invoice submission to our customer. We are into service industries, into the airport services. We have different line of services. When we got to bots, we got a partner to implement the bots for invoice submission to faster the process. What we realized, though final invoice is the same for my entire customer, but our different businesses has a different process of accumulating the data, compiling the data, submitting data, storing the document. So we had to spend a good amount of time, first look at our own processes to how to standardize those. And once we standardize, then the bots can do the magic. And here we are as a CFO to think all segment of business, all segment of our operations has to be in a way that it can be automated. It's to be seamless automated. That's the point. Secondly, I would again say the one important part is, when we do the automation and we do the digitalization transformation, it's very important to know what to do. At the same time, equally it is important to know what not to do. Sometimes we get an overdose with the technology, overdose with the digitalization, whether it's a personal life or professional life. But what to do, what not to do, it's very important to distinguish. It should not be overdone for anything for the processes, which may actually, too much data can be a garbage, as we all know. So create a meaningful data, create a meaningful informations which can be converted to an insightful analytics from those database. And the last point, Hemalatha, I always keep saying that, make technology as your servant, not your master. Technology as a servant is very good thing to have, but technology as a master is a terrible thing to happen to anyone and any organizations.
Absolutely right. So we should be having control over the technology, not technology over us. Yeah. So as CFOs work to determine whether or not to take this technology, of course, everybody is moving towards automation, right? You would be having, there are so many tools in the market, and each one offering a set of modules, certain things are there, which takes care of certain things. So how viable is it for the organization? Where does it fit your segment of market that you're working in? Like a logistics, a tool that's there for the logistics may not work for any other sector, for example. So how does a CFO basically determine whether it's required, evaluate it basically with the IT team and the CIO? So that is a very important decision, because if you are spending money, it's not based on spending money for buying technology, but relevant technology that is required for the organization. That's a very important decision that the CFO has to take, of course, with the CIO and the IT team. So the question is to Shinu, what strategies can CFO employ to ensure seamless coordination across departments and stakeholders during digital transitions?
No, thanks for the question. All this, whatever transition we are talking about, whether it is like a digital transformation or any major project, what you do, one of the most important things is coordinating between various departments and also between our own finance team verticals or maybe the entire team itself. And major part of the technology side is normally handled by a partner or some external consultant who will come in. But this is one softer aspect which has to be on top of the things for all the CFOs or all the project leaders, whoever is driving this project, because people are involved in this. one. Secondly, what happens is many people would not be under direct control of your, your span of control. There would be maybe some other department, etc. So what happens is when you have to influence them to do something, so the first thought which comes to their mind is he trying to push something on me and he wants to reduce his work and maybe add to my work? Or the team might think that, is it a technical way of saying that I will lose my job after say maybe 3 months or 6 months once it is online? So all the people who will be partner to us in this particular journey, it is very important that that trust and that bonding, etc., is formed at the first level itself. So 2-3 things which comes to my mind. We recently did one transformation actually. I'll just give a background in short actually. So we had one, I am part of a telecom company, so we have a lot of customers, and most of the customers we have is a post-paid kind of a model which they pay later on. And many customers have multiple accounts actually. So when they pay, they will maybe send a mail saying that I am paying against this 1, 2, 3, 4 bill, and maybe one bill he would be paying partially, some bill he would be deducting TDS, some bill he would be deducting something else. So all those things he will put in an Excel sheet, somebody will have a SAP, they will directly send a mail to our standard email ID, somebody will send a PDF, all sorts of things happen actually. So what we were doing is that we had one team who used to look at all these physical documents, then punch it in a machine readable format which has to go into our receivable module, and then there would be a checker also, because finance guys, we are very expert in maker checker also, it's an important thing. But there is another team who will check all these things, whether whatever has inputted has been correctly done, because it's a customer data, and suppose if we say put it in some other customer, that the first customer will get barred and the other customer will be using that credit to that effect. So this was happening, and in the bargain what was happening, there was a lot of time which was going. So we said that how do we do it in a manner. So the first thought was that once we automate all these things, the people who are the first time entry people, the people who are doing the validation, etc., all these people will not be required obviously. So that thought was there, but the bigger thing which we brought to the table was that how do we serve the customer? Because at the end of the day, whatever digitization or whatever we want to do, primarily there are only two things. Either we are improving the customer journey in our system, or we are doing something to maybe increase the efficiency of our department in terms of maybe scaling up or reducing the cost or whatever you call it actually. These are the two primary things. So what we did was that we brought the why actually on the table as to why we want to do this. Because what happens is everybody is doing so many things, so we also should do something. That should not be the purpose at all actually. Like just now what she said was that there is a cost involved, so there is a cost benefit also which comes into the play. So what we did was we took all these stakeholders. So stakeholder identification itself is a major process actually. So we identified who are the people who are going to get impacted, and then we brought everybody on the table and we said as to what is the purpose, why we want to do this, the larger purpose. Very important that we don't tell the people you do this, but we have to give that larger purpose to the person that this is the purpose which you are going to drive. And you are only one part of that, but the purpose is bigger actually. So that thing has to come first. Second thing is that once that purpose is there, you have to ask the people who are doing this activity as to what are their pain areas. That is very important. We might, maybe consultant will come and tell you one solution that this is working fine in some particular XYZ organization, but that might not be suitable to you. Your systems might be very different. Your scheme of things would be very different actually. So that is very important. You take an input from these people. So when you take input from the team who is going to operate this, so there is automatically a buy-in which will come, because person will feel that, okay, my inputs are considered and obviously that is what is going to come. So that buy-in comes there. Third thing is that the R&R mechanism also has to be, the reward and recognition has to be also very clear. What happens is in such a scenario where there are multiple teams involved, some team might feel that the credit will be taken by X team and I will be only doing the donkey's work and not getting the credit. Very important that everybody comes on the same panel, everybody is aligned that this is our project and not finance project or sales project or customer service project. So that belongingness has to come. If that does not come now, people will shy back and maybe talk behind the back that this will anyway never happen and all those things. And people who are experienced in the system, generally our first thing is, as soon as somebody tells you, let us do this one, 2, 3, 4 things. So the first thought which comes to people who are there in the system for long would be that, oh, ये तो पहले भी हमने कई बार किया, होता तो है नहीं, फालतू time pass type का. And unnecessary, we will waste our time. So we have to do two things. We have to do our thing also, and also this automation related stuff we have to get involved. So our time is anyway limited. I am very busy. So that buy-in, when that comes, then only that person will stretch and do that kind of a thing to actually get into the groove and ensure that it happens in full. And the last thing, which is the most important thing in any of these projects, is the persistence. So what happens is, these kind of projects, now, when we start, actually we started this project which I told you. So what we did was, that I'll just summarize at the end. So what we did in this particular thing was that we started off saying that we will do it in 6 months. So initially we think that we will do 1, 2, 3, 4. But during the course of the project itself, there were a lot of ifs and buts. Many people came with new inputs. Somebody said that no, in our scenario, this we thought, but this is not working. Other IT systems are not supporting. All those things came up actually. So that persistence and pushing that across various teams, ensuring that we find an alternate way as to how to ensure that that person's concerns are also addressed, that also is very important. Otherwise, what happens is, these projects normally start with 6 months and run for 1.5 years actually. It does not happen as per the timelines. There is always a overrun which happens. So that persistence is very, very important. So that is also something which I would like to put across to all of you actually. That is something which actually helped us in our project. So what we have done now is that all these mails, whether it comes in a mail or a PDF, Excel, whatever, this system, this will go into that and read all those data points, put it in a machine readable format, then match that. There is a 3-way matching which is there, because that system which we have put, it has access to our billing system also, from where the outstanding etc. is appearing, invoice numbers, everything is there with this tool, and also it has linkage to the bank. So it will do a 3-way matching. First, it will check whether the UTR number which customer is saying, whether that is matching with the bank and the amounts are matching. If both are matching, then it will come to our system, match what is the deduction which is happening. Suppose there is a deduction which customer is not talking about as to what is the deduction, it will automatically send a mail to the customer saying that it is not matching, why you have deducted, is it TDS or whatever. If customer says it is TDS, etc., it will automatically push it into the system saying TDS receivable and all those stuff. And at the end of the quarter, again send a mail that this is the TDS you have deducted, please issue a form 16, etc. And parallelly push that data into the system. All these things which was happening maybe in 1 or 2 days, now it happens in minutes actually. And the accuracy is increasing by the day. So that is also one thing. Once we implement these kind of projects, now coordination subsequently is also very important. It is not that once you implement that, that's the end of the road. Post that also, a lot of coordination in terms of hand-holding, training, all those things are also very, very important. That's it from my side.
Yeah, so that was quite insightful. So basically, if you're buying some technology, of course it has to be top-down. Also, is it going to be bottom-up? Your users have to accept it. Many of you maybe can relate to what he said just now. Khyati, do you have any other views you would like to add to these points?
No, I completely echo what Shinu has said. And just to add, when we are talking about evolving in complex environment, we're talking about transitions, we're talking about how do we get buy-in and all, and technology and all of it. I think, and when someone touched upon the skills needed and all, I think one very, very critical thing which has to run not only at the core of the CFO's office, but across the organization is a change management, right? It's very difficult for people who've been following certain traditional methods, who've been doing ways in a certain in a certain approach and all of that, to immediately accept all of this analytics, AI, and all of these new age things, right? Change management, I would say, is not being taught in a 1 hour, get a facilitator and get it done, right? So it's a company-led approach. It's being learned on the job, where you take a step further to tell your people, a wider organization, and not only your teams, that this is okay. This is how it is going to be. This is how the markets are evolving, and this is how we have to evolve so that we are in tune with the market, where we can proactively preempt what are going to be the risks, what are going to be the challenge, right? So that change management tone has to be at the top, where Shinu also touched upon that we get a buy-in from the top cross-function, and the entire top management speaks that language of agility, speaks that language of, okay, we don't know how to adapt to certain processes, but okay, we will upskill our employees. We will kind of give them certain trainings. We'll give them, and we'll do it with empathy, so that the employees are also onboarded at the same pace. Sometimes you're so driven that you want to do everything in the world, but you have to take the organization in that mindset. And I think that kind of change management, agility, and resilience will definitely breed a lot of persistence in the organization. So yeah, that should be the core.
Thank you. You have something to
Hema, I just want to add 2 lines here. Any change management, I think the entire process is to be driven in 3 different baskets. The first one is a pre-implementation stage, when a planning stage. Here is very important that you get into the team and tell them what your intent to. Be transparent in your communications, and ensure that you get them into your board, and explain the larger picture, and most importantly, in each and every individual, what is in it for him and her is to be explained. I think that's the first, before the project start, whenever you do anything. Second stage is that during the implementations. When you're doing the implementations, it's very important to be part of the team, understand the problem, understand the challenges, be a facilitator to solve those problems. Let the team solve, but you create an ecosystem where they they are supported. There are people who can support them in case of need. And the third aspect is the post-implementation handholding. It's very important that you ensure the transition is smooth. So handholding a system, handholding ecosystem created within an organization are also very critical to move to a transformational change.
Absolutely, yeah, that was quite interesting. With automation, that the companies have moved towards automation, CFOs must definitely acknowledge that with this data is there, lots of data, as Shinu was saying. So with that data, how do you make meaningful output? How do you get the analytics, based on which you can take decisions, the strategies for the company you can build. There's a lot of automation tools and all available, which are on cloud, etc. So the question is to Nishant. Now, what are the key considerations for CFOs when embracing digital solution for real-time, transparent and financial reporting?
Thank you. So I've been working with CFOs since more than 15 years, and I've seen the role really evolving. And in fact, the panelists have talked about more technology than I know. So that's my humble submission. Maybe I have to learn about tax and audit so that I'm competent enough to debate with them. That's a very heartening sign, because as a service provider to CFOs, we need to be aware what are the challenges that they are facing, and challenges are evolving. I mean, the complexities are increasing. We thought that COVID was the abnormality, but now there is a change happening either in macro or microeconomic variables, and CFO's life is difficult because they have to deal with AI, they have to deal with geopolitical situations, etc., etc. Now, on top of that, the compliance is not reducing, right? So just to give an example of my own company, I represent Wolters Kluwer, and it's a $5 billion odd company based in Netherlands, and we are present in India, in Europe, and also in US. Our annual report was 100 pages, I think 4 years back, but now it is 297 pages. Because you have ESG, you have multiple gaps, you have different regulations that you have to report out. So on the one hand, We have challenges which are more future looking. So they are being handled by FP&A department in the CFO's office, whereas we have to deal with compliance and consolidation and reporting challenges, disclosures, for which it's a separate department. Now, as my fellow panelist said that, technology is a terrible master but a great servant, just to rephrase what he said. So I really go with that example. So what I have seen is, for example, let's take an example of artificial intelligence. Now, we talk about ChatGPT, Copilot, and getting an answer quickly from that. But it may be of limited use when you are looking at the processes which are there in CFO's office. So what we are finding that is useful for CFOs using these technologies, and what we have embedded in our solutions is that it can help in your auto mapping of data. When you're taking the data from your source system, for example, to consolidate or to report, those auto mapping can happen because department waste a lot of time in this data cleansing. Also, it can help in kind of mapping the chart of account, which is an important activities in CFO's office to report out the numbers. So we can use machine learning fuzzy logic over there. So this auto mapping can happen, and the numbers can be reported out faster. Then on the disclosure part, you can use those capabilities which are somewhat like ChatGPT. So we can integrate with something like Microsoft Copilot, and you can ask questions like, why my profit is high this year? Then the system can search the data and publish a paragraph. Of course, that will be a draft, and we have to correct it like we correct our emails. Sometime we send through ChatGPT, and that will be a local GPT instance, because you don't want that data become public before it's being published. So with all those things, what we are trying is to help out CFOs in becoming more compliant and report fast, so that they can spend more time in analysis rather than this collation of data and collecting of data from various sources, collaborating with the various functions. Another important part I want to mention is ESG, which has not come to India in its full force like it has come in US. So we have scope 1, scope 2, scope 3 requirements. You all would be aware about the guidelines. So since we are a European company, or European headquartered company, I will say, so we saw the full-blown ESG reporting earlier. So that I just want to share that we should be prepared that it will be even more scrutinized, and we will be spending a lot more time. And you can share with your peers or contact your peers who are in Europe or other nations where ESG has become, because it will become a very big reporting challenge as well. So in the end, what I like to say is that I think it's very good to connect with the CFOs who have already done that, and change management, as some of the panelists said, is a very important task of any transformation, any technology transformation project. Also, you need to see how the technology is being used. Is it just a gimmick where you are producing just some chart, graphs, or some answers, or is it really helping your job?
Yeah, thanks, Nishant. Thanks for touching upon that topic, the young kid in the block, ESG. So if you see, everybody has been talking about technology, and there has to be change management in the system. So I come from a GST background, a company who's giving GST offerings. So people, they work on Excel. Throughout the month, everybody is working on it, and then once they are done with the GSTR1 filing, 3B filing, vendor follow-ups, again the next month comes. So 365 days, they are busy. They say they can't fall sick, they can't go for a holiday, they can't take just take the family out, spend time for themselves. So of course, definitely there is a need for technology, and the change has to happen. So the culture of innovations has to be coming from the company itself. So when you do a change, there has to be an experimentation that has to happen. The result of experiment, of course, everybody knows, can be yes or no. It can be success or failure. And everybody should be ready to embrace if it's a failure. So only when you do the experiment, you come to know whether it's going to work or not. So without taking a risk itself is a risk for the organization, right? So the next question is to Arun. How can CFOs foster a culture of continuous learning and upskilling within their finance teams? In fact, you can extrapolate it to the whole organization.
Sure. So first of all, we need to understand that what is the background finance guys are having generally. So if you look at most of the leaders, managers, they are having a background of doing CA, CS, CWA, CIMA. These are generally the professional degrees which are having very good focus on academic excellence, and there is a good amount of training which happens through internships, which gives you experience on the functional part. But the behavioral and leadership parts are generally missing in these programs. So that is one area which is like having a gap right from beginning. That is one thing. Second aspect is that if you look at medical or engineering, there is some kind of specialization right from beginning. But when it comes to finance, we start as a generalist and then we gain some kind of a specialization over a period of time through some experience. And I'll give you a classic example of one of the company I worked with. And there was a vacancy for finalization head, accounts finalization head. And the HR head was saying that why not that treasury head can take care of it. He is also CA, OB CA hai. So every CA can do everything, it's not possible, right? We need to have such kind of specialized training so that we can do even a proper job rotation. Otherwise, it is not feasible that you can actually give that kind of role to a person who has not done that for the last 10 years, right? So upskilling is very, very important and very much needed. Now, how to create that learning environment? So we have to start from within. You have to lead by example. If you yourself will go across for some programs, you are trying to learn new things, you are creating a culture where if there is a new regulation, there is a discussion which is happening, there is a brainstorming which happens. Even you can create some kind of study circle. If you talk about CA Institute, they give study circle establishment. If you have requisite number of chartered accountants in your particular organization, you can register your organization as a study circle and you can get CP credit for your own employees. So even, I mean, those kind of things should be done. And we have to promote that if suppose somebody has done a program in say business analytics, okay. Now, that person is currently doing a job which is relating to payables. How to take care of this, that you are creating an encouraging environment where somebody will pursue these kind of program. So if you give a job change to that person, that from payables now you are getting into FP&A. So you can now start utilizing your capabilities which you are learning from business analytics program, and somebody is doing a master's, and then after that, if that person is still continuing the same payables job, then we are not creating that kind of environment. So these are the examples through which we can embrace this thing, that how we can foster a learning environment, and we have to promote this. That is how we can really cherish all the dreams we are having from our own team. And one thing I would like to add here, I am from TimesPro. TimesPro is an organization which is into learning and education. We have tied up with so many IIMs and IITs, and also we have our own teams which are developing a lot of programs in the upskilling area. So here I can announce that if your respective company's HR deals with our company, I will give a special thing that there will be some special benefits for your organization.
On the learning thing now, one thing which recently we have done in our organization is that LinkedIn Learning, there is a button at the bottom of the screen, you will see, which says coaching, actually. I don't know whether anybody of you have tried that. It's a very good tool, actually. What you have to do is press that coaching and just type what is your problem. Say, if I want to, I put a problem saying that I want to do this project, but there is a lot of resistance from other teams. Example. So it will automatically take you to a video which would be maybe 2-3 minutes, but it will be pinpointed from the entire universe of LinkedIn learning, and it will give you as to what are the 1, 2, 3, 4 things which you should do for getting success on that. A very good tool, actually. 2-3 days back only I was using that. Very good tool, actually. Yeah.
Oh, that's great. And Arun also has given an offer. See if you can reach out. So, actually, if you see, the most sought out after resume now is CA with an experience of AI enable. So if anybody wants to do that, you can always get it. So plain CA is not going to work anymore with all this technology coming up. So the next question is to Raj. How do CFOs balance short-term financial goals with long-term sustainability in an uncertain world?
Thank you. Thank you very much. Good morning, everyone, first. And my name is Raj. I'm representing Thyssenkrupp. I'm a CFO of Asia Pacific and Middle East and Africa for regional platforms. So that's my role. But the question which came, it is so pertinent for today's world. Okay, because we CFO, it's a day-to-day activity we have to manage our day-to-day need of finance, okay, and we need to align our strategy with our financial strategy for long-term vision also. It's not so easy. If you see, say 5 to 10 years back, we always had budgetary process at beginning, and then it was like a very holy book, and it's very much guiding principle that how we need to go for entire year, okay, but now it is everything is changed. Your shareholders gets changed very fast, okay. If today you are promoter driven, tomorrow you will have private equity, thereafter you may go for IPO. So once your shareholder gets changed, your I can say business direction also gets changed, and your all strategies also needs to realignment. So starting with this, if you see that fundamental of CFO, it never gets changed. That's my starting words. Okay, whether it is short term or long term. Okay, vision. Things what you need to do. You need to first align all the strategies with your business direction. It is first fundamental aspects. And when situation is very uncertain, because you have given a flavor that uncertainty is when it's prevailing, that what the new tact or strategy we need to develop, it will be more emphasis on when I'm talking here. So considering this aspect, whether it is short-term financial strategy and goals, whatever we will have, whether it is your day-to-day cash flow management, okay, your target for free cash flow, or managing your operating cycle. Operating cycle is very crucial, which convert your all activity into cash, which is called also cash conversion cycle, whether it is your capital allocation or capital structuring, cost optimizations, increase of enterprise value. It's all are short-term and long-term both. Okay, this aspect what I am talking, it is not like I will have a different activity in long term. All have short-term sight and long-term vision also for that. But we need a perfect alignment for that. And as a CFO, when we are dealing such kind of scenario, then we have a lot of paradox, okay, which hitting. So like I need to manage day-to-day affairs, then I have to promote business transformation also. Then I will be cost conscious, and sometimes I have to collaborate with my management team for the growth. And growth itself is a big word. Okay, growth is not so easy to say that we can give a next 20 minutes on the growth, but it's growth we need to promote, but you should have the cost consciousness also. then you need to keep your financial core intact and create the value, bring the lot of flexibility. So you must have learned is that ambidextrous organization, but it's more like ambidextrous function. So you need to keep your core intact, but you need to see your vision, what you are creating for the future, okay? Where business is going for that. And if you see it, current environment, okay, in a long-term vision, which is predominantly, which is coming, it is always there is a struggle between, or you can say strategy between profitability and growth, okay? So there is no constantly, business can say that I'm only mooted for the growth or profitability. It is always, you will want both, but it is always a wish. And it gets changed, okay, based on the scenario. Then another one is coming the value proposition of business also getting changed due to, my colleague, already panelists have touched upon about the ESG, or carbon neutrality, sustainability, and DEI, okay, inclusiveness. It is all the topic which is raising your value, modifying the value of business, and CFO cannot exclude, okay, themselves. So they need to be inclusive and support the business, and it has also some financial impact, okay. Likewise, okay, and but then it comes to for disruptions also. I cannot leave this disruption aspect because it's the major factor which is impacting business. Disruption is the definitely in form of technology, okay. We are talking a lot of things. It is definitely giving a lot of opportunity to business to align, okay, their system, strategy, process, and see what bottom line, top line, and bottom line they can get from that. But a lot of barriers also coming. Barriers in the shape of carbon tax. When I'm sitting in the conglomerates in corporate, then I need to see not one business. I have umpteen number of business. Then I need to strategize. Hey, if my sales in Europe is mostly it is going, then what the changes I need to do? Where first I'm sitting? I'm a tier 1 supplier, tier 2 supplier, or I'm OEM. And what I have to do to save those 20% taxes which is coming. Then new entrant when it is coming with, I can say, new model of the business, then you need to react like that. So these disruptions and new regulations also, it is also we need to emphasize more that regulations, if you see, today's globalization of regulations, okay? From globalization of business, now regulations also is globalized. You must be knowing after a year or two that Pillar 2 is the one thing which is bringing a national tax concept rather than individual company basis tax. But it is more impacting the conglomerates, okay, bigger multinational companies, but it is a fact. But I need to react for that. Okay, so these kind of changes, wisdom CFO must carry, okay. Apart of that, couple of, I can say, advisory, or I can say it is my opinion, what they need to do is first, they need to see their decision-making process also, and it must align with the risk tolerance, means business risk appetite must be aligned with the risk tolerance, and see that what are the biases prevailing, and CFO is well equipped to remove those kind of I can say biases and policy which is running in the business, and every business has to follow that, following that. Second one is that efficiency should be a constant process, okay, whether improvement of cash flow, improvement of cash conversion cycle, cost optimization, it is a continuous process. Meaningful automation is also, I can say, always I'm promoting, I can say business can take leverage, because today the prediction of demand is very tough. When it is abruption is, I can say, so many disruption is going on. So demand, and you need to forecast accurate demand and supply, then you must have a meaningful automations, who can have a data intelligence and data sanitization, which can give you, and so that your data and your reporting and your planning could be accurate. Last but not least, pay attention on your team, because very important when you are talking a lot about the automations, technology, skill, then in economics we are saying the absorptive capacity, whether your team is ready for that, to absorb whatever happening in internal and external environment. So equally importance we need to give to the team so that they can make your thoughts into the action, okay, and ultimately organization going to gain that. I thought in brief I can give you this, my overview. Thank you very much for inviting me.
Yeah, thank you very much. Actually, this topic is so interesting that we can talk for hours and hours. We have a time limit. We just, maybe just time is up now. We can just maybe take 1 or 2 questions. Any questions? I think everyone's getting hungry now, lunchtime. Okay, so let me just summarize. I mean, I don't think nothing much, so everybody has taken it much in detail. So definitely CFOs have to navigate through these economic uncertainties. Trust has actually emerged as a new currency now. Trust amongst customers, trust amongst employees is very critical. Focus has to be on transparency, the reporting insights, etc. Provide, now that one point which we did not cover was the cyber security vulnerabilities. So provide adequate funds. That was not discovered. This is my point I'm adding. Provide adequate funds for cyber securities. So we'll just thank you all, the panel members, for very insightful discussion. I hope the audience found it useful and knowledge you could gain out of this. And thank you very much once again. Thank you.